Hello guys, welcome to this new and exciting episode. So in today's episode, I want to talk about a simple principle, which is actually the market maker, right? So the market maker principle, something like that. So before I talk about anything further, I want to explain what a market maker is and his objectives in the market. So a market maker is actually a machine or a people who function as intermediaries who facilitates transaction in purchases between two parties and one or more currencies. So what is meant by this statement is that this market maker is actually is actually the person or the machine that facilitates all the transactions that we see in the market, which means he has got the ability to trade, to induce, to do whatever they do, right? So let's talk about the objectives of these market makers, right? So the first objective is that he has to induce us retail traders to take positions, right? This is highly achieved by using those range of price movements so that we actually take trades in a certain direction, right? Then the second objective of him is, he is here to create panic and to induce us to be emotional and irrational when it comes to the market, right? And most importantly, this market maker is to hit our stops and clear the board, right? This forces us traders to go into margin trouble and go out of the game. So let's talk about the market maker cycle, the trend, and level counting, right? So as you can see on this chart, you can actually see that we had our push, and push, right? This is the ideal market. This is the ideal market structure that we see when we are trading the PTMM, right? So an ideal market structure is made up of a higher high, which is this point, then a higher low, then a higher high, then a higher low, or vice versa. It is actually made of lower highs, lower lows, and stuff, right? So let's explain this market structure. You can actually see that I said it's ideal because you can never find something perfect as this on the market, right? So as you can see, these higher highs and high lows are a trade mechanism, right? So in most cases, you definitely see that at this first high right here, you would definitely trade these people who were buying from this point, right? They were buyers up to here. Then this push to the higher low is actually a trade mechanism to take these buyers out, right? As well as induce sellers into the market. You see, this is the mechanism of how this strategy works, right? And before we do anything crazy, I want us to go to a real chart and I want to show you something crazy, something you may like, right? So as you can see on this chart, we had our peak formation low right here, right? And we had our first higher high right here, and we had our higher low here, then another higher high here, then another higher low here. So this objective, as I said, he is here to induce and trade traders, right? So as you can see right here, people were piling buys, right? So you can actually see that after getting enough volume of those buyers here to reverse a bit here to take these people who are buying up to this point, right? And after taking those people out, okay, sorry about that. This move also induced sellers to take crazy ass positions, and when sellers volumes were actually accumulated here to shift back up right here, right? So this is the mechanism of the market, right? So right now I want to talk about this trap that is actually happening in most cases, and you may find this trap usually when the market is moving from level 2 to level 3, because he knows that we know that the market is to go up, but he will definitely trap. Let's talk about this trap, man. So as you can see, this is the chart that I'm actually going to explain. It's ideal. I will also shift to the root chart. So as you can see right here with our level 1, level 2, then on level 2 here, this is where the trap was created. You can actually see that he was going down, creating some lower highs and lower lows, trading price action traders. So as he reached this point here, he created this W. And whenever you see a W or M, not that below that there is liquidity, there are people who actually trade, right? So a lot of people placed buys here because they saw this W. Even BTMM traders would have definitely been trapped here. We'll talk about how to make entries and stuff on this one. So you can actually see that this one, people were actually buying, Then when people saw this graph going down a bit, they would definitely see something like a lower time frame ID50. Then on this point they would have bought again. Then this move would definitely take them out. Then after taking them out, you can actually see that there was a mechanism of an M that was created here, right? So people would see that M, and many people would do something like, oh, let's sell, let's do this, right? So this consolidation or something that he created, let's put a line here, right? Let me try to draw a straight line, right? So somebody would have put something like a resistance. Remember when we had this point here, it was a support, right? So when it broke this point, it became resistance. So many people were actually anticipating sales here, so they wanted to sell, right? You see where the trap is actually going. This is actually happening in most cases, and the broker, yes, no worries, he will definitely trade like this. So level counting, so you have to make sure that your level counting is in order. Let me shift to a real chart and show you something crazy about this kind of thing. So as you can see right here, I want to show you my level counting, right? So with our peak formation low here, then this was our peak formation high. As I said, this setup actually in most cases happens in level 2 up to level 2. So this was level 1, level 2. So I want to explain where it all happened from this point here. So as you can see right here, sorry, let me do this. Okay, as you can see right here, this was something crazy. There was liquidity right here, because this is something like a swing point. So below every swing point, you have to know that there is liquidity. So there are stops below this point, right? So many people were actually, were like, okay, now we are buying, we are going. So they bought, right? Even BTM traders, they saw this V and were like, okay, let's buy. And you see what happened. It's the same mechanism. You see, the broker had to reverse the market. Sorry, I mean the market maker had to reverse the market so as to take people as well as inducing more sellers. So if you can actually take a look at here, you can actually see that this is a big M here, right? This M was done so as a mechanism to trade people to sell, right? Then after you got enough volume for those sales, you had to push back to this other level. If you can take a quick look, you can actually see that this was also our point, right? And below this point, which was a swing point, you can actually see that there is liquidity there. And you see what happened. He did this, then went down to take these people up, and people saw this something like an M. Then they started to buy, sell. You see how he reversed. Okay, so this is like the foundation of what we would do, considering resets, peak formations, ID50, and safety trades versus peak resets. So I hope you guys understood what I've just said on this episode. If you like what you're seeing on the channel, please make sure you hit the subscribe button. Don't forget to comment and tell me what you think.